All right, we got another video from TD Ameritrade. I think we got good old Dan Ives. The green tidal wave is coming for it's coming for all the other automakers. The green tidal wave. It's Tesla's house and everybody's eating lunch or something. I forget the other catchphrase that Dan Ives has, but yeah, let's see what he has to say on TD Ameritrade.
Watch list. I'm Caroline Woods in for Nicole Petalides. Let's talk Tesla. And when we talk Tesla, we of course talk to Dan Ives, Managing Director, Equity Research at Wedbush Securities. Dan, happy Friday. Good to see you. Thanks for joining us.
Say green tidal wave, Dan. Come on, say it.
Great to be here.
All right, so Dan, Tesla shares took a beating after earnings, basically flat today, but down about 6.5% on the week. Yet you raised your price target after earnings. So what has you so upbeat and what has investors so downbeat?
Yeah, Dan.
Yeah,
what happened?
Karen, we've talked about this before, me and you. This is just what I view as the second inning of a 9-inning game for Tesla. And I think ultimately, now you're starting to see demand
he always says that
stabilize, and I think ramp, especially in China and the U.S. Prices, now look, Musk didn't take off any more price cuts, which why the stock knee-jerk got hit a bit, but they're not going to put their back against the wall. And I ultimately believe 95 to 98% of price cuts are in the rearview mirror. And now you start to get that sum of the parts story, from superchargers to AI/FSD, talk about the OEM that they're in talks with, to battery technology. And I believe this is a stock that continues to go higher despite this knee jerk after what's obviously been a parabolic year.
But Dan, you were already, of course, bullish on Tesla with a $300 price target. You bumped it to $350. What specifically stood out to you from this earnings report or from the earnings call that warrants a $50 price target bump?
Okay. The question is now, will Dan be able to justify his $50 price target raise after the earnings call? I wonder if it's because, for me, maybe it would be because Elon finally voiced that they're going to be licensing their FSD out to other automakers, other big OEMs. It could be that they're investing more into Dojo, that the battery and solar business is booming right now. They're making it's huge growth. I don't know what he's gonna say. The Cybertruck. I don't know the I don't know what he's gonna say. Let's see what he says if it makes sense.
Didn't take off any more price cuts, which why the stock knee jerk got hit a bit, but they're not going to put their back against the wall. And I ultimately believe 95 to 90.
From this earnings report or from the earnings call that warrants a $50 price target bump?
Yeah, I think ultimately it's really become the autonomy of electric vehicles in terms of everything that they're doing, because now from a valuation perspective, it's some of the parts. It's not just from a demand, from an auto, from a delivery. I view now you start to add what the battery technology could be, what superchargers could add, and ultimately the drum roll. And I believe this is how you get to $1.5 trillion, $2 trillion market cap. It's FSD AI. So I view stock selling off knee jerk. I view that as sort of table stakes relative to where I see the stock going over the next 6 to 12 months. And I think yet again, over the coming months, the bears will go back into their caves in hibernation mode.
Okay, so he thinks because of FSD and battery. So he wasn't really specific on what exactly he saw that on the call. He just kind of said all the things that we've been seeing: the storage business, the robo taxis, FSD. The superchargers won't really move the needle that much. Yeah, I don't. Dan Ives just kind of rides the wave. Like, he just kind of goes up and down. Usually, when the stock goes down, he'll drop his price. I kind of have a feeling that the margin story isn't over yet. I think that next quarter the margins are gonna either be the same or even lower. So the price might drop even more next quarter. So, yeah, I think, I don't know. I don't know if it's over, and I don't really care that the margins are up and down. Like, I'm in it for the 5 to 10 years, 20 years. I'm going to keep buying when the stock price goes down. So This short-term stuff doesn't matter, but he's a fundraiser. He's in charge of people's money. They want to see profits. They care about next 6 months to a year. So yeah, he wasn't really that specific. Dan, come on, man.
What is the opportunity in licensing FSD? Because I know you're
Hey,
bullish
wow.
on that. You just mentioned it, but what's the end game there? What could that look like?
Pure profit.
I mean,
What are you talking
I
about?
think that could ultimately be even bigger than the opportunity that we've already seen in Tesla the last decade. But because of the
Pure profit.
software-based opportunity on FSD, and I think if they start to actually license
Software-based
out that
profits.
technology to other OEMs, similar to what we're seeing on Supercharger, there could be maybe tiers and subscriptions. I think that's the golden goose. I think when you look out into the next 5, 10 years, and obviously Kathy talks about this, the robo taxis, I think
Kathy Wood, shout
that's where
out.
this story totally changes. And that's why I do view Tesla how I viewed Apple in 2008, 2009. You'd come out of quarters, investors would sell it on iPhones, and our whole view is look at what they're building, look at the services. That's the key to the sum of the parts valuation. And you snap your fingers, and here we are at 3 trillion, where a lot of investors thought 1 trillion was never going to happen.
Okay, Dan. Good job there. I gotta talk about what Dan just said. That was really good. Software as a service. So Apple did a similar thing. People are talking about their iPhones and they're only looking at the hardware sales on the iPhone. They're just looking at that. But Apple was building their ecosystem, building all that stuff, building the app store up. And then once they launched that, boom, it went crazy, right? So similar thing with Tesla and their not superchargers, but superchargers and FSD. So people are seeing just the cars. It's just the car company, right? That's what most institutional investors are saying. It's just the car company. But what they're building that not a lot of people are paying attention to is the full self-driving technology. Their software is going to be insane. Once they solve that, they get that out to other automakers. They have to license it from Teslas. There's probably going to be different tiers, which he's right about. There's monthly subscriptions. And then you will start releasing the apps. You release an app store as well. Once 20 million cars have all the Tesla software in it, they're going to release their app store. Well, the app store, there's no store yet, but there are some nice apps on it. But once they release an app store and you have to buy apps and subscriptions, and then Tesla takes a cut of every single thing, just like Apple does, that's the big giant opportunity there. So it's not just licensing it out. That's going to be huge, right? We're going to make a lot of money from that. Tesla is. But also the app store and the software and the apps and the percentages that they get from all the apps that they're going to sell. So that's another thing that Tesla has that no one's talking about. So I'm happy that Dan said that is a future, a long-term perspective thing there. So I really like that Dan said that. Good job, Dan.
But Dan, you talk about the murky macro picture, I believe is your terminology for it. Elon Musk says the challenges of these uncertain times are not over. Do you think he's going to have to continue to slash prices to spur demand, and at what expense or what cost margins?
Look, I think around the edges, you can maybe see some rebates, some price cuts, but ultimately, in terms of margins, I think they're flatline. I think flattish to ultimately start to rebound in Q4 into next year. Not going to box himself into a corner, Tesla, especially what we're seeing in China. But I believe the vast majority of that's in the rearview mirror. I think demand looks strong. And you talk about the murky macro. I mean, our view, this is not calling the stock for the next few weeks. Fed, in terms of worries about, talking the tough talk, even though the white flag, in my opinion, is raised in terms of the end of these rate hikes. I look into 2024. I see a bright green light for Tesla, for tech. I think it's the start of a new tech bull market, in our opinion.
And have we seen the lows for gross margins?
I believe we have. I mean, look, it could have maybe 50, 100 bips, but I think more our whole view is it troughs. And I believe we are troughing. And after the stocks had just this massive move, you'll see those knee jerks in terms of the sell-offs. But I think this is a stock ultimately, as we go into US Open we're going to have a stock somewhere in the threes, in my opinion.
So you're not just bullish on Tesla, though. You expect to see a better than expected tech earnings season over the next few weeks. It really picks up steam next week. So more good news on the way.
I think get out that popcorn, because that's my view going into earnings next week. It's about monetization of AI. It's about uptick in enterprise. I think even from Arvind, IBM, you saw little breadcrumbs there. That's what you're going to see from Redmond and Adela. I think you'll see the same thing from Amazon, Google. The chips, we're seeing inventory worked out and flatlining, and I think rebounding in terms of demand. Cybersecurity and software and chips, I think, lead us higher, and which is why we believe tech stocks we're up another 15% second half of the year. And, you know, I could just tell you, I think it's a 1995 moment, start of the internet. This is not 1999, 2000 bubble hype.
Is there any concern, though, that a lot of that optimism is already priced in? Because when you do look at Tesla, top and bottom line actually beat, yet Tesla's lower this week. Netflix was a bit more mixed, but that subscriber figure was really impressive, and it's lower on the week. Are you concerned that, yes, we might see better than expected results, but we might not see it reflected in the stock price?
Yeah, look, it's a great question. I think it's more digestion after just a massive rally. You know, tech stocks up, call it 35, 40%. Yeah. But I don't think this is the end. I think it's a pause ultimately before this tech market goes higher. Because when you look into 24, you look into 25, especially with the Fed ultimately white flag, where they're basically done raising rates, you know, despite any what the hawks will say, that's a risk-on environment. It's bullish for tech. And I believe we start seeing improved macro. And unless you have a telescope or some sort of, a range that I don't see, it's hard to find that recession.
Dan, I love your optimism, so I'm not trying to rain on your parade or anything, but I'm just curious, what would derail your bullish thesis? What would make Dan Ives no longer the perma-tech bull?
And Karen, you always ask awesome, insightful questions. And I think and I remember we talked about this in December, I think the biggest fear was US-China, that cold tech war really starts to get worse and worse. To some extent, it's actually got better and better. I think it's really about the China story, supply chain, and any major disruption there. And outside of that, I'm not worried about Fed. I also still think many are on the sidelines watching these stocks move higher. I think fundamentals are going to be better than expected. I believe AI is the biggest transformative theme we've seen in 30 years. And my view is 2-3 years from now, we're looking at a NASDAQ that's much higher than where it is today.
All right, I'll be looking for your notes next week. Dan Ives, Wedbush Securities. Always a pleasure.
Thank you.
Thanks so much.
All right, he didn't say green tidal wave this time. Wow, he didn't say any of his catchphrases. That's interesting. Okay, so yeah, he covers a lot of tech stocks, it seems like. But one thing that I wanted to talk about, the China thing. So that was a big issue on the call. They were talking about they're kind of like I remember there's early talks to expand the China factory even more. So now they're kind of maybe holding off on that and concentrating on Berlin, and then probably Texas and other areas where they're going to expand, because they don't want to have to rely so much on China. Like, China produces so many of Tesla's cars that they want to have more volume coming out of Berlin, more volume coming out of the US, and possibly other countries too, maybe Canada, maybe India or France. So that's smart. Mexico, obviously, that's very smart, because they're too reliant on just one factory in China. They don't want to keep expanding that one factory. And then what if something happens with China, right? Then that's cut off. They could still sell, they're still selling in Berlin, in Austin, in Fremont. So they could still sell, and in Berlin, they could still sell a lot of cars. But it's very smart to kind of diversify in terms of your countries that you have your factories in. So I think that's kind of smart to kind of pause on China, because China produces 1 million a year anyway, so 1 million plus. So that run rate is awesome. They just need to beef up those other factories, so just in case anything happens, they have all these other options. So I think that's really smart. So yeah, Dan Ives, man, he's back in the news. He kind of changed his price. He raised his price target for kind of no reason. I don't know. He didn't really say specifically what he heard that made him raise his price target, but he's long on Tesla, but he is in charge of a fund, so he has to keep them happy, keep his clients happy. So he's got to talk about all the short-term stuff, but he thinks that the price cuts are over. I don't know. I don't think it's over yet because there's going to be some retooling at the factory. They're going to have to stop production for a while. The interest rates are probably going to go up even more. So he's going to have to cut price. Tesla's going to have to cut prices even more. So I don't think the price cuts are necessarily over, and I don't really care if they price cut or not. If the stock dips, I just buy more stock because I know I'm in it for 5 to 10, 15, 20 years from now. They're going to have robo-taxis everywhere, licensing them out. They're going to be Tesla bots in your house and in factories. There's going to be solar panels on your roof. There's going to be a battery in your garage. And Tesla's going to be making billions and trillions of dollars. So I'm in it for the long haul like most of you guys are. So if you want to keep watching with me, keep watching by clicking one of these videos. Subscribe to the channel. We're trying to hit 1,000 subscribers, guys. Let's go. Let's hit 1,000 so I can monetize this channel. And I'll show you guys how much it makes in the back end. And I'll show you how much stock I buy with this channel. I've scaled multiple YouTube channels to over 100K. And I'm a full-time YouTuber. I quit my job a number of years ago, and I do this full-time. So this is a new channel, and I'm very interested to see the community that builds here of investors, of like-minded individuals. It seems in the analytics, we're all above 24 years old. I have 0 people under 24 years old on this channel, which is kind of crazy. I've never seen that before in my 7 years of being a YouTuber, but it's very interesting, and I want to get these conversations going. So leave me your thoughts in the comment section down below, and I'll see you in the next video.